Okay, everybody. Today we're here. We're going to talk about things mortgage. I'm Keith Kalk with Premier Sotheby's. I am a broker advisor. With me today is Rob Warren.
Hey Keith, thanks for having me.
Tell me a little bit about what you do and where you're at.
Rob Warren with Prime Lending. I'm born and raised here right in Central Florida. Been in lending and banking since 1997.
Wow, so you've been through a lot.
Oh yeah, seen the ups and downs and the in-betweens.
Yeah. Okay, so in this video, let's talk about rates. We can't really talk about what the rate currently is because that changes how often?
Could be hourly, depending on the market.
Okay, so if we told you a rate right now, by the time you watch this, it would be completely different. So let's just talk about rates in general. How often do they change? What does the Fed rate, how does that affect it? Because I've always been under the opinion that the Fed rate is what it is.
Right.
You know, what the mortgage rates are, and that's not true.
No, not at all, yeah.
So why don't you explain a little bit about that?
That's a huge misconception. We hear that all the time. Whenever the Fed announces we've dropped the rate a quarter, I get 10 phone calls. What's my rate now? Well, the rate's the same as it was yesterday.
Yeah.
The Fed rate is something that's known. So when they say, hey, we dropped the rate a quarter today, the industry already knew that was happening 6 months ago.
Right.
It's been announced, it's been predicted, it's been in the books, they knew it was coming.
Yeah.
So typically what you're going to see is when the Fed rate drops, the mortgage rate's already dropped possibly 3 to 6 months prior to that in anticipation of that drop.
Right.
So it's not a direct correlation. The Fed rate is a short-term rate. That's the money that's loaned to the banks overnight for quick lending.
Okay.
That affects your car loans, your home equity lines of credit, your revolving type loan programs. It doesn't directly impact mortgages.
Okay.
Obviously it affects the economy, which in the end may affect the mortgage rates, but again, they automatically anticipate what's going to happen, and that's already been adjusted in prior to that drop generally.
Okay. Now, one thing that I've heard recently is that the mortgage rate is more tied to
the 10-year bonds. Mm-hmm.
The 10-year bonds.
Yeah.
So if I want to see what the mortgage rates are doing,
Mm-hmm.
and
Watch
not
the
go,
bond rate.
watch the bond rate.
Yep.
The 10-year bond.
Yep.
Okay.
Treasury bonds. Yep.
Treasury bonds. Okay. If you're looking for more information, we have a bunch of videos out there. Take a look at them. I'm Keith Kalk. My phone number is 352-431-8539.
And I'm Rob Warren. My number is 352-552-3384. NMLS number 432395.